Thomas Murphy now, the managing partner at Family Office Research and Management, joining us now from Sydney. Tom, a very good morning to you. So much news this morning again, really, but how do you assimilate the US jobs concern to the European concern, Greece and France? I mean, what are investors thinking this morning? Is it sell in May and get out of there?
John, it's a fascinating day because the U.S. data were somewhat negative, but I say somewhat because they were quite within the range of what people were expecting. But investors in the United States were disappointed. But this is still in the context of an economy that's growing at a bit over 2% per annum. So the announcements this morning of the election results in France and Greece, which are coming in as we speak, are a much greater concern to investors, because it was only very recently when the first round of French elections delivered us the result where it appeared that the Le Pen vote, which was fairly substantial, could have swung towards Sarkozy, even though there's no love lost between the two of them. And Le Pen's decision to stand back and take an informal approach, in other words, not vote for either of the candidates, swung the election back toward François Hollande. So today, the markets are really focused on what happens between France and Germany, because they are very diametrically opposed, with Germany seeking to control inflation and France now, under the new leader, looking to grow.
That's right. Of course, also German elections come up as well. We had a bad result for the CDU party in northern Germany. Lowest election results since 1950. So clearly the Merkozy alliance, if you like, again, is clearly going to take a bit of a buffering from this. Overall, looking also at the Greek story, Tom, is that more of a concern for investors this morning or less so than France?
It's a concern, because the New Democracy and PASOK parties only weeks ago probably would have been expected to have a 51% majority. And we still may have that, but it's such a deadlock between the combination of those parties and the peripheral parties combined that it's hard to see how we're not going to enter into a negotiation for yet another coalition. We have to remember that the PASOK and New Democracy parties, one or the other, has pretty well controlled Greek politics for nearly 40 years. So this is a significant and marked change. And when you look at the policies of the other parties, apart from those two, they are extreme viewpoints, either on the side of the Communist Party or on the side of the extreme right anti-immigration party. So it's fascinating today because France, being a core European nation, and Greece, being a peripheral European nation, have both come to the conclusion that they are very uncomfortable with the fiscal austerity measures and the bailout measures being brought about in Europe. And you might have expected one group or the other, that being core or peripheral Europe, to have had opposite viewpoints. This is not exactly what's happening today.
How does this therefore play out on investor minds in Asia? There you are in Sydney, of course. Figures out today from Australia, very strong indeed as regards building approvals, retail sales. But you are concerned about what you called, in fact, the Aussie dollar suffering from huge capital inflows purely because the dollar becomes more expensive. That's a concern. And also this week, Chinese data, there's so much of it, also weighing on Australia and, of course, for China. So the European issue, is it a big thought right this morning for the Asian investor?
John, you just hit on one of the most worrying things with the capitalist class in Australia, and that is the Australian dollar, because it is so strong and we are attracting so much foreign central bank capital into our bonds that it's really damaging our export and tourism industry significantly. We are a very, very rich people on paper, but if that Australian dollar holds up the way it has, we're going to have an economy that is almost solely dependent on the mining boom. And when the mining boom ends, from the Chinese moderation in growth, which I see as somewhat inevitable, then Australia will actually be in quite a problem. But as you said, the data that have come out here today and in the past few days, data that primarily came from March and early April, are actually very, very positive. It looks like we will grow at 3% or close to 3% in the next financial year. And when the budget is handed down in Canberra tomorrow night, that budget is going to seek a balance, in spite of the fact that we are only growing at 2. And when I say only, there would be a number of major economies around the world that would envy that growth rate. But here it is less than what we have become accustomed to.
Thanks for that. Tom Murphy, joining us in Sydney there. Tom Murphy, many thanks indeed for joining us this morning.